Hello, good morning, guys. Welcome to AlexG FX channel. So we'll be continuing from lecture 4. So now lecture 5 of Make Money Online Forex Trading Beginner Guide. So now the key content for this session is how to enter into a trade, the types of analysis. So and also consider in detail fundamental analysis, technical analysis, sentiment analysis, and also indicators. All right, so let's set the ball rolling. Okay, so how to enter into a trade? So note that we don't just enter into a market just to buy or sell without having any knowledge of what to buy or sell. And the second point is that you agree with me that for you to buy or sell something in the market, you must have done your analysis or research as to what to buy or sell. So yes, so this is a basic knowledge for even the normal market we go to buy stuff. So in order to buy something, we already know the price we want to buy, and we also have a budget of the amount of money to spend, and we also know the things, the items you are going to buy. So in the same scenario, in the same idea, that's the same scenario we use to trade the forex market. So in the forex market, you have to have a price in which you want to buy, and you also want to have what you want to buy. You don't just buy anything, but what do you want to buy and how much do you want to buy it. So how much do you want to buy it? So in that scenario, that is the same way you treat the forex market. All right. So the next point is the types of analysis. So yes, we have the three main types of analysis, which is the fundamental analysis, the technical analysis, and the sentiment analysis. So yes, so the fundamental analysis basically is using news. So it's basically known as the news trading. So you are using a global, what is happening in the global economic scale. So what is happening in the world? What is happening? So we consider that in order to make decisions in the market. And the technical analysis is using tools, the tools you have on your trading platform to be able to predict the next price movement of the market, which is basically using the demand and supply levels and also the trend of the market. So the sentiment analysis. So the sentiment analysis basically talks about what people are seeing in the market. So they are just like the gossips, the grapevines. So what are people saying? So if a lot of people are saying, oh, BTC is going to rise, BTC is going to rise, EUR USD is going to rise. If a lot of people are saying it, and basically it is being followed through social media and YouTube and all of that stuff. So that's when you know the general idea of what is going to happen in the forex market. And you trade with that. All right, so note that it's not necessary to know all all the types of analysis to be successful trader, but being very good in at least one of them can make you a successful trader. So yes, so it's not compulsory to know the fundamental, technical, and sentiment analysis, but at least know being good at even one, just technical analysis can make you a good trader. So just one is okay. It's even okay and not confusing. All right, so the next slide talks about the fundamental analysis in detail. So yes, so the fundamental analysis focus on economic events and data. So examples is the interest rates, the inflation, employment reports. So these are used for long-term direction and news trading. So based on current information, example, so USD may rise if US interest rates go up. So that's it. You so that is where you hear a lot of people saying, I know what if you are a trader, if you have ever traded the market or you are a beginner or and you really follow the forex market, you really hear of CPI, the NFP. So those are the high impact data which are released that affects the forex market. It causes a lot of imbalances in the forex market. So yeah, so if you want to be very good in the fundamental analysis, then you have to be very good in news listening. So you have to follow all the news going on in the market closely, especially when there are data releases on interest rates, inflation, and employment reports, and also the GDP and all that. There are more examples to that. All right, so the technical analysis. So the technical analysis is based on charting price patterns. So it uses tools like the trend line, support and resistance, and indicators. So uh, it helps identify entry and exit points. So based on past information, so example is that enter a buy on a bullish engulfing at a support zone. That's it, at a support zone. So technical analysis. So I would say that if if you don't know technical analysis, then it will be difficult for you to enter into a trade because basically for you to enter into a trade, something must show that yes, this at this point I can enter. You don't just enter trade, and the main point is the price patterns. So the way price is behaving can make you anticipate that you'll be in the right direction. All right, so it uses to like trend lines, support and resistance indicators, which will be considered in our next slide to come. All right, so sentiment analysis. All right, so the sentiment analysis, as I said, is a general knowledge in the market, and it measures the mood of traders, either bullish or bearish. It uses tools like the cost reports, the volume analysis, the news sentiment. So it's useful to avoid trading against the majority or big players. So based on current general idea, so example, when too many buyers may indicate a coming sell-off. So when too many buyers are indicating a coming sell-off, then you should wait. You should be in line with the buyers. You know, you should be in line with the buyers and do not enter the market. So you wait when there's now a cool price for you to buy after the sell-off, then you can take a good trade. So yes, so it uses tools like the cost report. So down the cost report tells us the positions of these major players in the market. So the positions of the commercials and non-commercials in the forex market, as well as the reportables. You know, the reportables, that's the retailers in the market. So, and also it uses volume analysis and also news sentiment. All right, so in sentiments, you follow the majority. So that's it. So what people are saying, you just follow. But you do that with careful, being careful, not trading against the majority. All right, so then last slide is indicators. So now indicators help traders analyze price movements and predict future trends. So they are tools applied to charts to assess decisions. So examples are the moving averages, which smooths out price data to spot trends, and also the relative strength index, which shows overbought or oversold conditions. Alright. So with indicators, a lot of traders use indicators to support their decisions in the forex market. And this is very helpful when you use it very, very well. So it helps you predict future trends and also uh, assisting in the decisions you make. So the example like the moving average tells you the average prices over a certain period of time. So if the prices are the prices are too above the average, then you should know that there will be a mean reversion. So the mean reversion is that always the price is around. So no matter how the price moves away from the moving average, it will always come closer to the moving average. So you can use those ideas to trade the forex markets, which will be very easy to do. And also the relative index. So the relative index shows the number of buyers or sellers in a particular point in time. So it uses the sizes of the candles, which tells us the number of buyers and sellers in the market. So this is a range between uh, 0 to 200. So when it is above 50, which means that there are more buyers in the market. So the RSI index will be above 50. But if it tells us that there are more sellers in the market, then it means that the RSI index will come below 50. So also this can also assist us in knowing when the buyers are strong and when the sellers are strong. But I will advise that the relative strength index should be used on the lower time frames, not the higher time frames. And also the moving averages, I recommend that it's used on the higher time frames. Yes. All right, so there are more indicators available. We have the MACD. We have a lot of them which you can uh, go do a little research on it so that you know more. All right, so we have considered a lot today, and this is the end of our lecture 5. And now, thank you very much for having time with me to take you through this lecture 5. Please continue to support me by liking, subscribing, commenting, and following me. So this is the end of our video. And now it's a bye for now. Thank you.